Thank you very much, Abna. That was really interesting. Now we move on to our very last panel. The topic is exploring the opportunities for private sector investment and funding to change the game in Agri-Food-Tech. The moderator is Nana Ochribedu. So Nana Ochribedu, please take over from me.
Right. Thank you very much, Anita. And a big thank you to all those who have preceded our panel. I think the tone has been set very well. And it's very adept that our panel is last, but not the least. Because at the end of the day, the buck falls on the money to implement all of these wonderful innovations, partnerships, and solutions that we need moving forward. So let me start by introducing my panel. So my panel is of a diverse nature. First on my panel is Stephanie. So Stephanie Dorsey is a venture capitalist and runs a private equity company based out of New Orleans, Louisiana in the US, who are into investments in disruptive food and technology. The second member of my panel is Mr. Techi Shaha, who has extensive knowledge and experience when it comes to financial services and frameworks to support investments. And he is currently the COO of Gersal, which is a government-supported agency which incentivizes private commercial banks to invest in agriculture. And last but not least, my last panelist is Mr. Kwabna Opong Chicheku, who is a lawyer and partner at CQ Legal and Consulting. Mr. Opong Chicheku has a lot of interest and knowledge when it comes to the agribusiness space, among others. So, ladies and gentlemen, you are very welcome. Now, so to set the tone for our discussion, there's a few things that I want to highlight, which will drive the conversation that we are going to have. And let me start by saying that access to finance for agriculture is a very extensively discussed topic. But however, it continues to be extensive because it looks like we are not finding the solution. So bringing climate into the equation from the FAO, it is projected that yield losses from agriculture due to temperature increases of between 1.5 degrees and 4 degrees Celsius could cause up to 50% decrease in yields across sub-Saharan Africa. Agriculture could also lose 2.4% of GDP based on this, and food insecurity based on this might go to as high as 24% of the population if nothing is done about it. Now, I haven't painted this bloom image. It gets even more serious. Bank lending to agriculture continues to be low. So in Ghana, as of 2020, that was 4.5%. In Nigeria, 4.3%. In Cote d'Ivoire, 4.1%. In Kenya, 4%. And in Rwanda, 5.2% of banks' lending portfolios went to agriculture. Now, this will have to be significantly improved if we are to drive the kind of changes that are required to move our agriculture to a climate smart one and to a more productive one. And this will also lead to investments, or this will also require investments in agricultural technology, because this is what will actually drive this movement forward, as it were. But unfortunately, things such as increased perception of risk in agribusiness, low access to finance, increases in food imports and its related inflationary pressures, and then reduced exports and foreign exchange earnings for countries who are dependent in agriculture seems to mitigate these. And so it is on the background of these facts that we are going to have our discussion today around innovating to support agribusiness and technology in agriculture. So without much ado, I will start with you, Stephanie. Stephanie, I hope you're with us.
Yes, I'm here. Thanks for having me.
Nice. Thanks for making time to be with us, Stephanie. And first of all, I'd like you to give us a little background about what you and the team at E2JDJ are up to. And then we will get into our first set of questions for the day.
Yeah, absolutely. So I'm Stephanie Dorsey, founding partner of E2JDJ. We're an early stage venture fund focused on sustainable food and ag. So for us, that means that we look across the value chain from production to consumption. So everything from on the farm technologies like robotics and biologics to midstream supply chain plays to downstream consumer facing products. I'm really investing at the intersection of food systems, health, and the environment. Focus at early stages, so seed to pre-series A is our sweet spot. We primarily invest in the US, but we've also made investments globally so far in Berlin and Tel Aviv, so continuing to expand and really excited to speak with you all today.
Great. And we hope you are bringing some of those investments that are in Tel Aviv and co to the likes of Accra and Kumasi and co.
Absolutely.
Right. So doing these investments, there's definitely an innovation to what you do, or there are things, tools, financing structures that you guys are adopting that is not really common or popular in this part of the world. But those are the kinds of things that we are going to have to explore if we are going to beat the status quo. So I'd like to know what kinds of financing that you have done in the food and agri-tech space recently, and how you think you can leverage some of these in our parts of the world.
Yeah, absolutely. So, for us, the most common is, safe notes, also price equity, as well as convertible notes. So those are really the types of equity financing that we take part in. I would say in the region, we've also seen AgTech deals being done with venture debt as well. So I would say they're
Stephanie, sorry to interrupt, but can you give us just a little explanation of what those fancy
Yeah, absolutely. Yeah, so safe notes are essentially simple agreements for future equity. So venture equity is really around getting a percentage of the company, and then once there is an exit, that's how the investor is paid back. And then with venture debt, it's more traditional loans, but it's actually higher interest rates. So they're both intended for higher pace, higher fast executing businesses. And I would say that's sort of where, we've seen some of the challenges with AgTech is because, venture primarily is for, fast-paced businesses that are asset light. And then you're looking at, for instance, farming robotics that are more hardware focused, that have more and higher CapEx. And so you have to think about the pace of execution versus the expectations of your investors. And so that's really where we've seen, investors actually have to understand the framework. And that's why a lot of AgTech investing is done by specialist firms, and generalist firms typically come in, sort of later down the road once it's been tried and tested and there's data points and there's traction, there's revenue, et cetera. So I would definitely say that you have to think about, the types of investors that are coming in, and then also think about, sort of the speed. And I think one of the challenges is around, AgTech is so early. I would say meaningfully, really venture funding on the continent has emerged in the past 5 to 8 years. And you see Silicon Valley, it's been around for 46 years or so. So it's an ecosystem that needs to be built around the entrepreneur, so that they can have, the funding at every stage and also have the different interactions with different players to be able to build out. For AgTech, for instance, entrepreneurs are building the whole tech stack from scratch. So you can imagine how much harder it is to actually get to speed when you're trying to just sort of do everything incrementally on your own. So, it's really going to take time, but I think you have to think about sort of the drawbacks and the pros of getting particular types of funding. But the main issue to be concerned about is the pace at which you'll, sort of go, because venture funding is just one part of the funding journey. There's also other types of funding that you can get in the form of loans. And we can talk about and get into that later with, other types of support. But I would say venture funding is just one part of a financing journey, but it doesn't have to be the only one.
Yeah, and that's interesting because we're going to need things like venture funding to come into the space very strongly, because the traditional lending products that we have in this part of the world are at odds with the kinds of cash flows that traditionally you see in agriculture, because here farming is very seasonal. So you're not seeing money every month, right? And so these are some of the things that will need to come into the space so that we can innovate and finance entrepreneurs in the agribusiness space. But in bringing these sorts of things to let's say Ghana, right? What are some of the impediments that you see in implementing or in operating in this part of the world?
Yeah, I would say, when I compare it to the AgTech scene in the US, it's really around small farm holders. And so if you take a look at some of the companies that we've invested in, they're going after large enterprise customers. And so what that practically means is that it's going to be less expensive when you think about sales and distribution. And so when you think about trying to sort of go directly to growers, going directly to small farm holders, it really just has a risk early on. Particularly a lot of the companies on the continent in the AgTech sector are early stage businesses. I think it's around 80%. So it gives a higher risk of failure. And I think that's, when investors are thinking about the risk, they're thinking about, what are the chances that a startup will fail? We know 1 in 10 fail. So what makes it, a higher likelihood of success or a lower likelihood of success? And I think that sort of scares off investors, but you've seen some startups get around that. And so, that's why I would say midstream technologies, for instance, are really emerging in the AgTech space. I think that was around 61% of all AgTech funding last year. So it's really emerging to be able to actually connect players as opposed to sort of going out to small farm holders and selling, on the farm technologies. So I would say that is also one. And then, infrastructure challenges around having to build that tech stack from scratch. And so I think the issue is that you need those hard tech companies to build the infrastructure, like have that IoT company that's generating that data so that a SaaS company can come and leverage that data for their data solutions. But if you don't have the underlying technologies, you can't create those enabling technologies. So I would say really having that tech stack to build upon is also a bit challenging, because the VC funds will all run to that SaaS business, but you need that IoT business in the first place to be able to have that SaaS business.
Right. So it does really point to a value chain approach in investing, and again, trying to find a way to convince investors to come to this part of the world. Right. So thank you very much, Stephanie. And having mentioned the magic word, which is risk, I will then move on to my next panel member, Mr. Tichi Shahar. So, Mr. Shahar, thank you very much for joining us. If you could please introduce yourself quickly, then we'll get on with it. Mr. Shahar.
Thank you, Nana. Yeah, as you indicated earlier, I'm the Chief Operating Officer of GESA. GESA is Ghana Incentive-Based Risk Sharing System for Agricultural Lending. And GESA was set up based on your earlier premise of the fact that lending to the agri sector as a percentage of commercial lending is low, and it's due to the fact that financial institutions perceive agriculture as risky. So government in 2018 set up GESA, which became operational in 2019 to help the RICS agricultural financing to stimulate lending to this sector by financial institutions. And how do we do this? Currently, we're using two tools in our direction effort. The first one is our risk sharing facility that we use to provide risk guarantee cover on loans that financial institutions lend to agribusinesses, including farmers. And this risk sharing facility can go up to 70% of the principal amount that the financial institutions provide. And then the second tool is the technical assistance facility, which we using to build the capacity and training of staff of financial institutions to enhance their knowledge in agriculture and agribusiness operations. And I must say that banks shy away from agric mostly because they don't appreciate or understand the agriculture and agribusiness operations very well. So as guests, our approach is to identify and mitigate risks in agricultural financing. So we support this financial institution with respect to when they looking at funding proposals from applicants, how they should go approach it in analyzing some of these risks and mitigating measures that be in place so that these loans the applicants will be able to utilize it and pay back.
So I think what you mentioned about the genesis of Gersol is very much in line with the policy direction that the African Union intended to adopt. I'm a bit of a researcher and a policy analyst myself, so I like some of these things. And people in that space, of course, are very familiar with the Malabo Declaration of 2014, which instructs governments to invest up to 10% of GDP in agriculture. So that is very popular. Now, what is not as popular is the second part of that particular section, which reads that the African countries are also supposed to create and enhance necessary appropriate policy and institutional conditions and support systems to facilitate private investments in agriculture and agribusiness by giving priority to local investors, right? And so that being said, it looks like Gersol, setting up Gersol is quite in line with this, right? And so, like you rightly mentioned, Gersol's been around for 4 years. And in that time, I'm sure a lot has gone on. And we're happy that you have been there from the inception. So I would like to know, in this 4-year period of Gersol's short existence, what have been the impacts in general? And more specifically, what are some of the notable challenges and successes that the institution has faced?
Okay, so in terms of successes, actually we've been operating for the past 3 years.
Okay.
It was set up in 2018, but we started actual operationalization in July 2019. And since we started, currently 22 financial institutions have signed on to benefit from our support. And these include universal banks, savings and loans, rural and community banks, farm managers, and impact investors. And out of these 22, about 12 of them are actively participating on the scheme in terms of bringing applications to the scheme. And I must say that within this space of 3 years, we've been able to use the guarantee to cover loans valued over 700 million, benefiting 98 agribusinesses. And these agribusinesses are operating in 15 different commodity value chains across Ghana. And most of these loans, if it hadn't been to the fact that there is a guarantee, these financial institutions were not going to provide those loans to these financial institutions. And in addition to this, our technical assistance facility has also been very strong and well received by the financial institutions. We do this in two ways. One is collaboration with the National Banking College, where we providing training to staff of the financial institutions, taking them through the various commodity value chains. What are the cycles, the challenges, the risks and mitigants, and also appraisal techniques with respect to agribusiness facilities, because in assessing or evaluating agribusiness applications, you can't use the same brush as financial institutions use in looking at, let's say, a trading application. And in terms of participation, it has been very encouraging. We have over 360 staff coming through National Banking College for this capacity building. And on top of that, to enhance their knowledge and also access to information that will help in their credit assessment, we've developed an online portal that has all the information that they will require on 33 agricultural value chains, that when sitting at their office, let's say looking at a cashew or a maize application, and they need specific information, they can go to set portal for this information to help them in what they do. There are others, but I mean, in terms of time, I would just mention this.
Right. But I mean, that's an interesting space, and I think that's what my next question then would be about. So, in terms of your experience so far with what Gersel has done, how do you think Gersel can innovate? So, sort of like a Gersel 2.0. What are some of the areas that you think moving forward, such policy tools like Gersel can adopt?
Yeah, so currently our focus has been on building the capacity of the financial institutions. But from the work that we've done and the challenges that we've seen, I think our next step is to also see how we can reach out to the agribusiness to build their capacity to also be able to appreciate and understand the expectation of the banks from the agribusiness when they are sending applications, because we realize that some of the applications that comes, they are not able to articulate what they intend to do in terms of the loans that they're looking from the bank. For example, for a financial institution, whatever you're looking for, or whatever venture you planning to go into, market should be the starting point. And for some of these applications, you realize that even they are not able to articulate what the market size they are looking at, and even the sustainability of that market, and who the off-takers are, and their capacity to even take and pay them. And some of these are very important. The financial institutions are in the business of, I always say, selling money. So the money that they're giving to you, you should be able to show to them that you use the money to generate the necessary funds to be able to pay back. For example, if you are going to take money, let's say, to cultivate maize, and you are not able to articulate that I'm going to use this particular variety, which with all the practices, I'll be able to generate this output and get this revenue to pay me, then it becomes very difficult. And I'll give a very typical example. And most of the application that comes to us that we decline, especially in the agro-processing area. There are businesses that come, they want to set up, let's say, a fruit juice processing factory. let's say, a 5 metric ton plant per hour factory. But you realize that they've not think through how they're going to generate the raw material to feed this factory so that it will run continuously to generate money. So when you question them on how to generate raw material, you see that there's gaps. So we think that side need to be strengthened in our future work in terms of looking at the agribusinesses. We may not be able to do it, but maybe working through other partners will be able to help with the capacity of agribusinesses.
Right. I think that's very important. So you have professionals like my previous colleague Abna and Co. And her panel, who are experts in certain fields, who you can most likely leverage on to carry out some of these things, right? And that's quite important. But thank you very much, Mr. Shah. I think what you said regarding entrepreneurs and them not knowing how to, or not understanding the requirements of these financial institutions, it's a very important aspect of access to finance. Because if you do not know how to go about getting the money, then you just be moving around in circles. And that leaves you very vulnerable to all kinds of things, especially even outside of the typical bank lending space. When it comes to the private space, that's even more dangerous. And that takes me to my next question and to my next panelist. So Kobna, I hope you haven't been cold for too long.
Hi. Yeah.
Yes, Kobna. So yeah, your line is breaking a little, but I think you're good now.
Okay.
Great. So Kobna, nice to have you on. Please quickly, if you could say a few words about yourself and CQ, Eagle, then we'll take it from there.
Okay. So I am a lawyer in Ghana. I'm a managing associate at CQ Legal and Consulting. So CQ is a law firm in Accra. So as I was saying, one of the practice areas of CQ Legal is in the agribusiness, which I am very keen into it. Yes.
Okay. Cool. So that's good to hear, because one of the things that I've done some investment advisory myself, and one of the things that come up is a lot of the time entrepreneurs are very lost, right? They do not know how to navigate the fundraising space, especially in terms of what the rules are, what the regulations are. And so they are very vulnerable to predatory investments, and they leave themselves open to sort of deals which take their companies away from them, and things like that. And then in the tech space, right, we have all of these young people innovating, bringing up exciting AgriTech innovations. But of course, there is very important need to ensure that their intellectual property is protected, right? So in your experience, what are some of the structures in place to protect agripreneurs, first of all, from predatory investors and investment agreements? And then secondly, on the IP side, to protect AgriTech entrepreneurs?
All right, that's a very good and important question. Agribusiness now is an area which has a lot of opportunities. But what I've realized is startups and entrepreneurs sometimes enter into informal dealings, which sometimes let them be exploited by that. Agripreneurs or entrepreneurs in the agribusiness space try to formalize their business relationships by entering into formal, valid, and enforceable contracts, which should be assisted by lawyers, as I'll say. So I would like to look at some of the terms that any entrepreneur should be very, take note before they enter into any agreements with the investors. First of all, capacity. So if I say capacity, if an investor, for example, says he is representing a company, you have to find out if the company is representing, he has authorization. For all you know, he's doing it for his own selfish gains. So you need to probe to get some evidence to know that whoever you're entering into is the right person to enter into the contract with. And also you have to be careful. For every contract, there should be a commencement date and an ending date. There's no contract that should be in perpetuity. So if you're negotiating, you should be clear on that. The next thing I will touch on is consideration. I think Stephanie mentioned, as a venture capitalist, when they give out money, is either debt or equity. If you're an entrepreneur, you should be clear what you are giving back for that money. Are they giving it to you as a loan? Is there any arrangement to pay interest? Are they giving it to you to take shares from your company? So you should be clear about all these things. And also termination clause is very important. You should know that the agreed terms on how whatever agreement you have with the investor can be terminated. The next thing I will talk about is dispute resolution. Sometimes you might say, oh, nothing will happen, but you never know what will happen in the future. So it's very important that you have clear dispute resolution process if there's any disagreements. And then there's this part that people overlook, insurance. So if there's any damage or loss, you have to be clear who is going to cater for that. So you don't just go into an agreement, you take the money, maybe you are shipping some goods and the goods are destroyed on the way. Are you going to bear that cost? Are you going back to tell the investor that, oh, this is what happened? You have to be clear who is going to bear that cost. And also the obligations of each party should be well defined and you should know what you are doing. So for that space, I think a contract, a valid one, and knowing what you are entering into is very important. For the intellectual property bit, so we have ways of protecting. We have the patent, the trademark, and the copyright. When you come to Ghana, we have the laws that protect those intellectual property. We have the Copyright Act, the Trademarks Act, Patent Act. So copyright basically involves, creation of the mind, such as literary works, software programs, movies, those other related. Patent is more of invention, which I think it will be very relevant to the AgriTech, because now a lot of people are doing inventions. It's important that you patent it. And a trademark, your name, your sign, your symbol that distinguishes your business from others. And it is important to register that so that nobody can infringe on your rights, because you've put in your work, you need to earn from it. And for Ghana, you can register it at the Registrar General's Department, all these intellectual property,
So Kwabena, I think that's actually the issue. So a lot of us know that there are laws like that, right? We know you can do it, but the question really is, how do you do it, right? It's a bit of it looks gray and abstract, but to practicalize it, what are the steps? So I've invented, a climate smart technology that can be deployed on farms, right? What are the steps I need to go through to get that patented, right?
Okay, so first of all, you go to so what you've created is an invention, so it will be under patent. So you go to the patent office. They will have to do a search and be sure that what you've done is a new thing that you have created, you have invented. So when that search is done, you have to put in an application to register it. So the first phase is more of making sure that you are not taking someone's work as your own. So once you cross that stage, then you put in the application. For the duration, it depends. I can't give specific timelines, but the office will be the best people. But I know for patent and trademark, it takes some time, but I can't give the exact timeline. But but once you go to the office, any assistance you need, they will help you. But if you find things and complicated, as I was saying, you can get assistance of a lawyer to take you through the process. A lawyer who has a better understanding of intellectual property to take you through the process. Yeah.
And so you see, if we are not confident of ourselves that we can afford a lawyer, are there any free resources that entrepreneurs can access to get education around maneuvering the space? Not just in terms of patents and those things, but generally with regards to getting investments and things like that. Can you point us to?
First of all, yes, I'll point you to some place, but I'll give my personal experience. Even though I'm a lawyer, right. I attended a training program by GIZ. It's a German international organization. They did a training program on cashew value chain process. And I learned a lot from that. I attended the training program for 2 months and it was free. So those are some of the things I got to know more about this business, how the processes from production to manufacturing to exporting and all that. It was interesting for me. Now, coming to the institutions, I know of Ministry of Food and Agriculture. They have an intervention they've developed, that's the Ghana Commercial Agriculture Project. And this is to help increase private investment into the sector. So I think we can explore that option and find out how we can get something from there. We also have the Ghana Investment Promotion Center, which we all know. They are more into investments and all that. And I know they have certain packages for startups and entrepreneurs. If you go there, you can. And one other thing I would like to touch on is the Ghana Free Zones. I don't know if you know about the Ghana Free Zones. So the Ghana Free Zones,
yes, I do.
Yeah, certain areas demarcated as free zones under the Free Zones Authority. And if you operate in those areas, you get some tax and duty reductions and exemptions. So I would suggest that entrepreneurs can take advantage of some of these things that are available. Yeah.
Right. Thank you very much. So Stephanie, I'll come back to you. So with all that's been said, if you could, I'd want you to give your closing remarks, but I want you to touch on this as well. So we've been able to create a context for you as a venture capitalist based out of the US. And I think it's very important that we get foreign investors into the country, and especially into the agricultural space. So in your closing remarks, can you touch briefly on, in 2 minutes or 2-3 minutes, can you touch briefly on what you think are the next steps to get you guys investing in agriculture in Ghana?
Yeah, I think it's really important for investors to really get an understanding of, market conditions, looking at the opportunities. I would say, as VC investors, that they're always looking for new geographies. They're looking to be on the front end of a new cycle. And that's what you've seen with the boom of VC investing in, Africa. I think, as you think about the global macroeconomic trends and the VC downward trending, when you think about the funding cycles and what's happening all over the world, Africa has actually been defying that. So you've seen, especially in the first half of 2022, there were actually record-breaking levels of VC funding. Now it's slowed down in Q3, but it's still a lot better than it was in 2021 and definitely prior to that. So I would say investors are excited about new opportunities. It's really just about education. And then it's about the ecosystem level support that I talked about before. And then I would also add, it's about government and government support. And you see it in every country, Europe, US, Israel, Japan, that there are a lot of incentives and infrastructures that are in place to really get startups off the ground and running. And cash is the number one concern. So you have, grant programs that are provided. You have also loans that are either, low rates or no rates, or you have collateral-free loans. It's really important. And then also thinking about direct equity financing from the government that occurs, or indirect financing incubators or accelerators or early stage funds. Sometimes they do a one-to-one matching, or they'll invest in the fund that will have a particular mandate to invest in various regions. And I think that's really critical because, you know, that early stage risk is real. And I think a lot of investors really don't understand sort of the framework, but once they have some element of de-risking, then it provides a little bit more comfort. And once a startup can actually show traction and getting those data points to be able to show that they actually are executing on their ideas, I think that's when investors really get excited and other folks can come around the table as well. It's really a domino effect. So I would say all of those pieces are critical to cracking the code here.
Right. Thank you very much, Stephanie. So Mr. Sarha, I'll come to you. Stephanie says that they require a lot of supports in the form of cash directly or indirectly into the ecosystem. In your closing remarks, can you please comment on this briefly, or give us your closing remarks? 2-3 minutes.
Okay, so I would like to assure Stephanie and maybe our agribusiness practitioners here that in terms of government support, there have been a number of initiatives currently in place to help increase lending to the agri sector. KESA is one. There is also the Development Bank of Ghana, which started operations this year, and a sizable percentage of their funding is going into agriculture, and they come at, with a very competitive interest rate to the agribusiness. It's a wholesale bank that, as an agribusiness, you benefit through your bank. So there is assurance that you can, through Development Bank, you can get rates that are far cheaper than what normally the banks would loan to you. So the outlook is exciting for agribusiness.
Mr. Teshishara, thank you very much. Thank you very much for your time. Kobna, in 2 or 3 minutes, your closing remarks, but briefly also touch on what Stephanie mentioned, as in providing support to, or some sort of protection to investors to come in, but at the same time too, when they do come in, providing support and protection to local entrepreneurs. Kwabna.
I was saying that I think that there are already certain things in place, but what I think is more of implementation and effectiveness of it. As he rightly said, government is trying to do things, but it's more about implementing it. When you ask me in terms of laws, we have beautiful laws in this country, but it's more about enforcing it. What I will add is, I will suggest that we have more partnerships amongst ourselves. I'm saying this because, so I've attended an Agri-Tech program that was organized by the Israeli mission, and they have technologies they want to bring into the country, but our entrepreneurs in the agribusiness space don't have the capacity. And to get this capacity to be able to acquire this, to expand whatever we are doing, if we can come together, I think we can do more. So, well, that's what I would want to see.
Right. So thank you very much, Kobna. And again, a very big thank you to all of our panelists. I think to conclude, my key takeaways are that there are exciting and innovative financing tools out there which are hitherto unexplored in this part of the world. And we should, as practitioners of agribusiness, as financial institutions, as government, we should look at exploring some of those tools in this part of the world. And to enable us to do that, there has to be some sort of regulatory framework that supports or gives incentives to people to bring that sort of financing into the country. And we already do have a base to build on, because institutions such as Gersal have already had some experience and success in providing that kind of thing. And whilst this is ongoing, there are resources which entrepreneurs can access. The GIPC, other regulatory bodies which provide patents, licenses, etc., to protect intellectual property and to also protect our interests when it comes to entering into agreements. And so I'm happy that we have been able to generate this discourse, and I hope that we will continue the discussion until we crack the code in terms of access to finance for agriculture. So thank you to my panel and thank you to our audience. I will get out. I'm going back to you, Anita.
Thank you very much. That was very insightful. Thank you to all our moderators and thank you to all our guests, our panelists, sorry. We go on now to Prince Moses to give us the closing remarks.
Thank you very much, Anita. And thank you all for staying with us. So focusing on the topic, unlocking investments in the agri-food tech for climate impact and resilience. Future of Food AgTech Summit 2022 has brought you insightful and impactful views from some of the leading and influential minds and doers in the agri space from Ghana and from around the world. With its focus on the agri-food tech sector, Future of Food and AgTech Summit 2022 has been working to encourage innovation, drive partnerships, exchange best practices and attract investments. And I hope that some of the amazing success stories and business models will do you all the world of good. And quite aside from the triple win of climate smart agriculture in the areas of increased productivity, enhanced resilience, reduced emissions, some powerful keywords also emerged. I noted sustainability, productivity, mitigation, adaptation, innovation, technology, financing, partnerships, collaboration, farming practices, and nutrition, among others. I would like to say a huge thank you to our speakers, Eileen Bader, Country Business Head at John Deere, Kwabena Amoateng Frimpong, Regional Director at Africa at Ignitia, Costas Heitos, CEO at KZO Africa Sea Farms, Surajit Sinha, Director at Farm CEO, Chef Elijah Addo, Founder Food for All Africa, Dr. Patricia Amankwa Yeboah, Senior Research Scientist, CSIR Crops Research Institute, Gordon Ochre, Country Program Manager at Partners in Food Solutions, Sabita So, Founder and CEO at Legendary Foods, Mausi Ama Mawenyifia, Marketing and Channel Development Manager, Anglophone West Africa, Upfield. And we've got Carly Edwards, Founder Group App Ghana, Kwabena Opong Checheku, Managing Associate, CQ Legal Consulting, Techi Straha, Chief Operating Officer, Gersal Limited, Stephanie Dorsey, Founding Partner at JDJVC. I'm sorry about that. And for your moderators, I did moderate the first session. My name is Prince Moses Oforiata, General Manager at Asase Broadcasting Company. You heard Joseph Opoku Gapo, journalist at Multimedia Group, Abina Mamle Abedi, Managing Partner, Sustainable Agrotech, Nana Oche Beidu, Agribusiness Investment Consultant, and shouts out to the team who put all this together, Evelyn Kanyoke, Frank Edu Osari, Anita Vumega, Emmanuel Peter Amexo. And a very, very big thank you to the person who put all this together. His name is William Adum Amala. He's marketing consultant and CEO of Evoke Africa Group, a group of marketing and media agencies that partner with their clients to build future-proof brands. William has a strong passion for sustainability, particularly as it pertains to food and agriculture, hence his desire to partner with stakeholders within and outside the agribusiness industry to convene this thought leadership platform, which he believes has the potential to contribute to a robust food system. So thank you very much. You may follow us on Future of Food and AgTech Summit on Facebook. On LinkedIn, you can do Future of Food and AgTech Summit. You can also follow us on or visit our website on events.industrytodayafrica.com. My name is Prince Moses, and it has been fantastic doing this with you. If William would like to say a word or two, otherwise over to you, Anita.
Thank you all for making the time. We are really grateful for your presence. And Prince said it all, so I think this is the end. Thank you.
Thank you.